Have you ever wondered about the distinction between FHA and conventional loans? Don't worry, it's a common question, especially when you're on the lookout for a new home. Today, let's explore this subject together and shed some light on these two widely used loan options. Hi there, I'm Howdy, your friendly guide through the world of, well, everything. Before we talk, please remember to hit that subscribe button and drop a like on this video. I'd be mighty thankful. We'll delve into the pros and cons of each, shedding light on aspects such as down payment requirements, interest rates, and credit score needs. We'll walk you through the application process and help you understand the responsibilities that come with taking out a loan. Additionally, let me guide you on adjusting your budget based on the loan type you choose and how these loans can bring real value to your life. Keep in mind, while loans can be a powerful tool to achieve your dreams, they also come with certain risks. It's always a good idea to consult with a qualified financial advisor. Stay with me as we dive into the world of mortgages and explore these two popular loan types. First, let's unravel the mystery behind FHA loans. FHA stands for Federal Housing Administration. Now, don't let that official-sounding name intimidate you. Think of it as a friendly uncle from the government who's here to help you get a home. FHA loans are designed to make homeownership more accessible. One of the biggest benefits is the lower down payment requirement. Traditional loans often require 20% down, but with an FHA loan, you could put down as little as 3.5%. That's a big difference, especially if you're just starting out or don't have a lot of savings tucked away. Now let's talk credit. Conventional loans usually require a higher credit score, but FHA loans, they're a little more lenient. That's another win for first-time homebuyers or those who've had a few financial hiccups along the way. But here's where we need to be honest. FHA loans aren't all sunshine and rainbows. They come with mandatory mortgage insurance, which is a cost you'll need to factor into your budget. This insurance protects the lender if you default on your loan. It's a bit like a safety net for them, but it comes out of your pocket. Applying for an FHA loan isn't much different from applying for a traditional loan. You'll need to provide financial information, like your income and debts, and the lender will check your credit. The key difference is that the FHA sets guidelines for the lenders, who are then insured against losses if you default. That's the basics of FHA loans. They can be a great option if you're struggling to save a large down payment, or if your credit score isn't top tier. But remember, the lower down payment and more forgiving credit requirements come with the cost of mortgage insurance. So FHA loans can be a lifeline for those with lower credit scores or less cash on hand, but remember, there's no free lunch. As with any financial decision, it's important to weigh the pros and cons and always consider your unique situation. Now that we've tackled FHA loans, let's move on to their counterparts, conventional loans. Conventional loans are a type of mortgage loan that's not insured or guaranteed by the government. Instead, they're backed by private lenders like banks or mortgage companies. One of the key advantages of conventional loans is the potential cost savings. If you can manage a down payment of 20% or more, you won't be required to pay for private mortgage insurance, which can add a hefty sum to your monthly payments. Moreover, conventional loans often come with higher loan limits than FHA loans. This can be a major advantage if you're looking to buy a home in a pricier market. Remember, the more you can borrow, the more house you can afford, but there's a flip side. The benefits of conventional loans often come with stricter requirements. You'll need a good credit score. Typically, lenders look for something in the range of 620 to 640 as a minimum. And your income will need to be high enough to comfortably cover your mortgage payments, your other debts, and your living expenses. Applying for a conventional loan is a bit like applying for a job. You'll need to provide proof of income, like pay stubs or tax returns. You'll also need to show you have a responsible credit history. Lenders will look at your credit report and credit score to see if you're a good risk. And don't forget about the down payment. While it's possible to get a conventional loan with a down payment as low as 3%, a larger down payment will give you more favorable terms. In essence, conventional loans demand more from you up front. But in return, they offer greater flexibility and potentially lower costs over the life of the loan, especially if you have a strong financial profile. So, conventional loans may seem more demanding, but they can offer greater flexibility and potential cost savings for the right borrower. So, you've got the facts, but how do you decide between an FHA and a conventional loan? It's like choosing between apple pie and cherry pie. They're both sweet, but they suit different tastes. When you're making this big decision, consider your credit score. An FHA loan might be more forgiving if your score isn't quite up to par, but if you've got a strong credit history, a conventional loan could offer you better terms. Next, think about the down payment you have available. FHA loans typically require a lower down payment, which could be a game changer if your savings are a bit tight. On the flip side, if you've got a hefty nest egg, a conventional loan could be the way to go. And don't forget your long-term financial plans. Are you looking to stay in your home for many years, or is this a stepping stone to something bigger? Lastly, adjusting your personal budget is crucial, and seeking advice from a qualified financial advisor can be a lifeline in this process. Remember, the best loan for you is one that aligns with your financial situation and home ownership goals. Before we wrap up, let's revisit the key points we've covered today. FHA loans, backed by the government, are friendlier to those with lower credit scores and smaller down payments. They offer the safety net of a lower interest rate, but remember, you'll need to pay for mortgage insurance throughout the loan's life. On the other hand, conventional loans might be a better fit for those with a strong credit history and a sizable down payment. They come with higher interest rates, but you have the freedom to cancel the mortgage insurance once you've built up 20% equity in your home. Both have their own merits and drawbacks, and your decision should factor in your financial situation, long-term plans, and comfort level. So that's what I got for you. Remember, knowledge is power, especially when it comes to your financial future. Give that like button a little love, hit subscribe for more friendly chats, and share this video with your pals who might find it helpful. Your support means the world to me, and I can't wait to share more friendly advice with you soon. Until next time, I've been Howdy, and you take care of yourself, okay?